Welcome to Trading Frenzy, and today we'll be covering the best support and resistance strategy explained for beginners and how to detect the big bank hidden trap that causes 98% of traders to fail. We'll be covering what support and resistance really means. It's not what you think or how you've been taught. How to quickly identify only the ideal support and resistance lines you'll need. How to avoid the dreaded fake out the banks are purposely using to take your money. And how to break down any chart like clockwork and be ready to trade within minutes. This is the fun part. The first thing we need to do is stop overcomplicating. There is no need to overcomplicate or have an excessive number of support and resistance lines on your chart. It's only going to confuse you and you'll never know when the correct time to buy or sell is. As always, please like, subscribe, and comment. So let's begin. A support level is where the price tends to find support as it falls due to an increase in traders starting to buy. This means that the price is more likely to bounce off this level rather than break through it. However, once the price has breached this level, it is likely to continue falling until meeting another support level. Think of a trampoline. Once you hit the support, you will bounce back up. How high you go will depend on how much pressure there is coming from the bottom. Now, if there is too much pressure from the person bouncing, it will break the trampoline bottom and they'll fall through to the next level, being the ground in this example. A resistance level is the opposite of a support level. It is where the price tends to find resistance as it rises due to an increase in selling interest, meaning traders are starting to sell once a level is reached. Again, this means that the price is more likely to bounce off this level rather than break through it. However, once the price has breached this level, it is likely to continue rising until meeting another resistance level. Instead of a trampoline, think of bouncing a super ball off of a ceiling. It will keep bouncing off the ceiling, being resistance, until it breaks through and reaches the next level. While price action presents a somewhat objective framework for traders to work with, identifying workable zones of support and resistance requires a bit of subjectivity. The key is to find areas or price levels in a market where behaviors have changed in the past, thereby highlighting the potential for change in the future. That's not to say that support will always hold or that resistance will always bring sellers into the picture, but it does highlight areas where traders can look to impart strategy. The more often a support and resistance level is tested, touched and bounced off by price, the more significance is given to that specific level. If a price breaks past a support level, that support level often becomes a new resistance level. The opposite is true as well. If price breaks a resistance level, it will often find support at that level in the future. Psychological support and resistance levels form an important part of a trader's technical analysis. As price reaches a value ending in 50, for example, 1.0250, or ending in double zero, for example, 1.0200, people often see these levels as a strong potential for interruption in the current movement. The price may hit the line and reverse. It could hover around the level as bulls and bears fight for supremacy, or it may punch straight through. A trader should always exercise caution when approaching 00 levels in general and 50 levels if it has previously acted as support and resistance. What if you could go onto any chart and within minutes identify all the key support and resistance areas and be ready to start trading like the professionals do? You're now going to learn how to combine the proper 1 day, 4 hour, 1 hour, and 15-minute support and resistance lines to form the ideal setups. So let's jump on the charts. As always, please like, subscribe, and comment what else you'd like to see. It really helps our team. All right, so we're on the Euro USD 1 day chart right now. And this is the fun part. This is where the magic happens, where we apply everything that we just learned and put it to practical use right on the charts. So what we're going to do is we're going to start off on the 1 day chart. Now we want to look right in the area that we're at right now. And we're going to use and create the support and resistance lines. So what we want to do is try to find some areas in the past for support and resistance that we can use for the future to place our trades. So this area right here, and we want to use, I like to use a little thicker line for the 1 day and then progressively make the line smaller as we move down to the 4 hour, the 1 hour, and even down to the 15 minutes. So this is pretty much where we're at right now. So we see a support right here, and we find more support right there. Okay, so that looks like a pretty strong line. And then moving a little further up, we're looking at, again, we don't want to go too far away just because when we're looking at the 1 day, it could take time. We don't want to be putting lines that are 200, 300, 400 pips away because it could take months before you get there. So we want to stay somewhat close to the area that we're at right now. Um, and then as we use the time frames that are a little smaller, then we kind of fill in the gaps right there for the support and resistance lines. So, and again, as we move down to the different time frames, we may adjust these slightly from where they are right now, just to kind of fine tune them and get nice strong support and resistance lines, support and resistance zones. Okay, so the great part about this example here is we want to use the past to kind of help us with the future. But what we're going to be doing now in this case is we actually, this is 2022, we actually have to go back 20 years to 2002 before we can find other support and resistance levels. Okay, so look, 2002. So that's where we have to go to find the support and resistance levels. And the amazing thing about this is if we look at this right here, again, 20 years in the past have a resistance right here. Resistance right there. Resistance all the way throughout here. Again, and then, we can keep going, but I think you get the idea. But from 20 years in the past, we're finding the same support and resistance levels. So that's why these support and resistance levels are so key to helping us with trading. So that is pretty amazing to take a look at it. So that's how we're going to use the past to help us with our future trades. Okay, so now what we want to do is zoom in a little bit here. Want to fine tune these a little bit. Okay, so make sure that touches. That is coming pretty close. We find some more touches right here. And then same thing here. So we have another touch there, another touch there, um, sort of like a railroad in and up. Okay, again, that's the banks taking out stop losses, taking your money. The big fake outs that we talk about, again, right here, another touch, touch. So those are another areas. And now if we want to look again, we want to see if we can find some other key areas. So it looks like this may be another key area because we got touches here, touches here, touches here, and touches here. Okay, so now come to present day, if we break this support and resistance line, this would be another strong area to shoot for because we're seeing how it's touching, bouncing off, bouncing off, bouncing off, kind of like the trampoline. Okay, so I think we have some pretty strong support and resistance on the 1 day here for right that level, and another level up here. This could be a nice zone just to make it a little bit wider. Instead of just using a line, you can use kind of a rectangle and bring it across there. So that way you get all the touches. So you consider this like the danger zone. Is it going to go in and break through and keep going? Or is it going to bounce off? Like this one here, it almost reached it, bounced off. This one here touched it, then broke through and kept going. Okay. So we have pretty strong 1 day from where we're at right now. So what we want to do now is go back to today and see what else that we can create. So from the 1 day, we want to jump down now to the 4 hour. And from here, we want to just fine tune what we already did with the 1 day. Okay. So let's see if we can find some other strong support and resistance lines. So this is the one that we predicted down to the future. What might happen if we come down to here? This is going to be another strong support level. Okay. So let's take a look at right about. Looks like this is going to be another strong resistance. And I'm going to make this a little bit smaller since we're at the 4 hour. Okay, got a touch there, a touch there, bunch of touches here. This could be a little zone. We have another. Here's touch, touch, touch. Another touch right there, another touch right there. And then even if we want to go a little bit higher, we have a bunch of touches right in between. Okay, so that's the 4 hour. Just to add a couple more to see what levels that we're looking at. We want to jump down now to the 1 hour and just see if there's any more. So if you take a look, starting way back here, we're using this as a strong level, bounced down to this level, saw some resistance, broke through to the next level, bounced back up, broke through this level, kept breaking through, a little bit of resistance, broke through. Okay, banks took out some money there. This one here may actually be a nice level to go to as well if you just follow it along. So it came up, came up, came up again, and then we see some resistance there. So when you follow it along that way, you can get an idea of some other strong areas. And we're going to make this slightly smaller now that we're on the 1 hour. So if you follow it along, came up, hit again, hit again. The banks, that's the dreaded fake out when you get the long wicks, and then it takes out everybody's stop losses, comes back down, broke through to the next support, came up, hit that resistance, broke through again to the next, and then came back up and down. And then you can see how you can play with it, and we can now identify another area right here. So it came down, hit, went up to the resistance, broke through, came down, hit again, hit again, hit again, and then broke through to the next resistance. Okay. So now we got it broken down from the 1 day, the 4 hour, and the 1 hour. And you can see by going from time frame to time frame and then start identifying how many areas price hit and bounced off of, and that will formulate the levels that you can go to. So now what we want to do is go down to the 15-minute. And from here, We're now going to start right here. Okay. And so if we decide to take our trades, if we look at the past, saw some support there, saw more support here, so bounced off, like the trampoline bouncing off, and now we're back here. So we found support, support, okay. Now we make the decision, it's bouncing off of there, not breaking through, and it's gonna go, we're gonna place a buy trade. So now where do we want to go? The next area, where is the next area of resistance? So we look at the past. So if we're always looking at the past but to see if we can place our proper trade for the future, if we keep looking up, we see resistance here, resistance here. So that's what we want to shoot for our target. And if we're looking at that for our target, placing our trade, going up, that's a 46 pip profit. Okay. Now, if we're looking, it broke through that resistance. So if we're deciding to place another buy, where in the past would there be the next resistance? And then we would be looking at right here. Okay. So there's nothing here until we get to here. That will be your next area of resistance. Okay. And if we were to look, I'm going to put this down a little bit smaller to show the 15-minute. If we were to take that trade, another 22 pip profit. Now it broke through, yet again, that area. So we want to look at the past. Where is the next area of resistance? So looking back here, there's two areas. There would have been right there. And then there would have been another one right there. Ooh. Another area right there. And I don't necessarily like to use the wicks because that's usually the banks with their fake outs and taking stop losses and finding more pressure coming down for the sellers. So we find those next two areas in the past as resistance. So now going back to today, we broke through this first level, came back down, broke to one level, 16 pips, 28 pips, 39 pips to the next level, and then it continued all the way through 60 pips until the next level. Okay, and this actually came back down to, if you were to take a sell trade, that actually came right back down to the area that we looked at before for a resistance, now becoming a support. And to give you an idea, if you had taken that trade, we had another 23 pips. Okay. Now keep in mind, you're not always going to get in at the beginning of a trade. You're never going to get in at the very end of a trade. So this is just to give you an idea, depending on how you're trading, what your stop losses are, what your targets are. But we want to be able to use those areas um, for where your targets are going to be. Okay. Now this came back up, hit your now support, and it went right back up to right past where your other resistance was going to be. Okay, and then it kind of bounced down between the next support, trampoline, bounce, 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 went back up, bounce, 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 went back up, and then it shot right back down, breaking through all of the supports. So that is just to give you an idea of how to formulate your support and resistance lines like a professional, without indicators, without tools, trading like a pro, using the past support and resistance, even going back 20 years, and using that in the present to be able to set your targets, see where the market's going to go, and then use those support and resistance to the areas where you're going to go, and then see if it's going to either break through or stop and reverse. But use those as your areas to help influence where you want to go and make your trades. We're creating more videos on trading and strategies, so if there's any topic you'd like us to cover, please comment below and let us know. As always, please like and subscribe as it goes a long way in helping our team bring new content. Thanks for watching and see you on the next video.